So here's what I've got. So this came. So the first thing I'll cover today is showing you how to use BloodHound's fuzzy logic to give you additional information other than just the simple trade signals, but to give you additional information. And so, like in this case, we're going to use BloodHound's fuzzy logic to tell you when these three rules are still in agreement, with the current trade direction, right? So all four rules make up the actual trade trigger, I guess, the trade signal. And then of course you want to stay with the trade. You want to stay in the trade, as long as these three, think of these are momentum, trend, and let's see, the volatility part was kind of stripped out here. The volatility part was a little the volatility part's a little kind of vague in the article. So this system here came from a Stocks and Commodities article from February of 2012, and it's trend, momentum, and volatility type of a system here. So the volume oscillator helps identify that volatility. It's actually volatility and volume. Yeah, so they didn't put two V's in there. It says TMV. The trend part is pretty simple. The trend part is using the Keltner 20. The direction of the Keltner 20, is price above or below the Keltner 20. That's a part of the trend. And also the ADX, with the ADX sloping up, and the direction of the SMA 8 also determines trend. The CCI was used for the momentum, and then the V is for volatility and volume. So the Keltner is used for volatility, and then the volume oscillator is used for the volume part, right? So I already have a chart set up here. So this, the first part pretty simple. We're just looking for price to be, above or below our Keltner 20. So I've got the Keltner line on here, and let's see. I'm going to lighten up the midline here because that is what we're comparing against. Let's lighten that up a little bit. There we go. And then we have the CCI here in orange. So that's rule number 2, the CCI in orange. And then the ADX is right here in green. And also the slope of the SMA 8. So the SMA 8 is the thicker white line up here on price, right? The thicker dashed white line. And then we have the volume oscillator. So with the volume oscillator, they're looking for spikes in volume, and the spikes were a little subjective. So you just kind of have to take a look, through, a couple of years of data, just kind of, eyeball what you consider to be, these spikes in volume here. So let's kind of come up with something. We'll get back to this later. So, so let's just start. We'll start putting this system together here, and so what we're going to do is build a, just the trade signal, which is going to be a combination of all four rules. And then once the trade signal has fired off, we're also going to build kind of like a subset of all these rules to build a subset of logic that looks at these top three rules to kind of tell us that, you know, hey, that you know, we've got the trend and momentum still in our favor with the trade. So just to kind of give you some feedback there on those three rules. So let's see. Okay. So let's get started. I'll open up BloodHound here. And let's give this a name. So I'm just going to copy that for the name. Paste that name in there. Alright, there's our system name. And let's see, we'll put some notes in here this time. So this is from the Stocks and Commodities magazine. And I'll put the date up front. And yeah, all right, we'll call it good. Actually, here we go. And let's get to rule one. All right, rule one. So we're just going to check to see if price is above or below the Keltner 20 midline. Right, so those are our Keltner, and the midline is the dashed gray line there. So let's see, let's start working on the logic board here. I'll just rename the logic template there to call it entry. And we're doing a comparison, so let's grab a comparison solver. Connect that up. Alright, we're going to see if price is above or below the Keltner midline, like so. Alright, so we're going to set indicator A to the price. Right, and so all these price type functions is what I'm going to cover next after this section. And let's see, next we're going to put the Keltner in indicator B here. And it was using a 20 period. And yeah, we want to look at the midline, so that's selected for us. All right, and there we go. It's pretty simple. Stretch this out so we can see a little better, right? So if price is above our Keltner midline, you know, things are green for a long condition, and of course, if price is below the Keltner midline, right, the output's red for a short condition. All right, so that's rule number one. And all right, rule number two, CCI. We're just looking to see if the CCI is above or below the zero line. All right, pretty simple. This indicator right here. So for that, let's grab a threshold solver. And let's give this a name here. So we're looking at the CCI 13. And we'll just go and set the CCI up in here. Alright, so we're using the 0 line. So we don't need to change, we'll leave all the thresholds at 0 for the 0 line. And then we just have to set our output here. So we want a long output when the CCI is greater than 0. Or if the CCI is less than 0, we want a short output. Like so. Alright. So there we go. Alright, CCI above or below the 0 line. Getting a long or a short output. And let's see, what is the next set of rules is we want to know when the ADX is sloping up, right? So the ADX tells you if you're in a trending condition. And so with the ADX, a trending condition on price is only when the ADX is sloping up. So if the ADX is sloping down, then that tells you're no longer in a trending condition. So you're in a non-trending condition if the ADX is sloping up. So we don't care about the ADX sloping down. We only care about the ADX when the ADX is sloping up to tell us that we're in a trending situation. So, and then we'll couple that with the slope of the SMA 8. So the slope of the SMA 8 is actually going to tell us the trend direction, right? So the ADX never tells you the trend direction. You'll have to look at something like this, an SMA or some other kind of moving average to actually determine the trend direction. The ADX just tells you that you are trending or are not trending. So, all right. So we're going to look. So we want to identify when the ADX is sloping up. So we're going to grab a slope solver like so. And right, so ADX, and we're using a 10 period in this case. So let's go change this to the ADX. There we go. Alright, change the period to 10. Now, we're only interested when the ADX is sloping up, so we're only interested when we get a long output here. So what I'm going to do is set the evaluate to long only. Okay. Now, when the ADX is sloping up, that's not right. We only have a long output, but the ADX can be sloping up when there's a downtrend as well, right? So this upslope on the ADX is not only for long conditions; it's also valid for short conditions. So we can see, like right here, right? We can see that price is sloping down. So this ADX sloping up is also good for a short condition. So we need to take this, so we need both a long and a short output here because the ADX sloping up is also good for a downtrend or a short situation. So we're gonna to get both a long output and a short output, we're gonna use one of these function nodes here. So we're going to use a long short modifier like so, and we can take this mode and Let's simply just mirror the log. We'll mirror the log. So, all right. So now, if you look at our output, whenever the ADX is sloping up, we get both a long and a short output. All right. And so that's what the ADX is telling us. The ADX is telling us that we're trending, and we could be trending in a long situation, or we could be trending in a short situation. You know, one or the other. So that's what we need from the ADX. All right, so essentially we're using this long-short modifier to just give us a long and a short output. There we go. Long and a short output. And so next, to actually tell us what the trend direction is when the ADX is sloping up, now we're going to look at the slope of the SMA 8. So we'll grab another slope solver, like so. All right, we'll change our SMA 14 to an 8. Okay, so there's the actual, you know, trend direction. And so what you would do, right, so there, let's slide that over a little bit. Right, so we're looking at, so once again, we're looking at when the ADX is sloping up, which means we're in a trending condition here. And then we'll use the slope of the SMA, and let me name this first here, SMA 8. There, I'll put a name in there. So when we plug the slope of the SMA in there, then that actually tells us the trend direction. All right, so now that the ADX long and short output has been filtered by looking at the direction, the slope direction of the SMA 8. Right. Okay. So that's right. So this essentially right here, this is rule number 3. So we got rule 1, rule 2, and rule number 3. Let's pull this up here. So rule 1, 2, and 3 all have to be true at the same time. So what that means is we just plug everything into a AND node. All right. So yeah, let me take this opportunity and kind of give us a little simple explanation of AND or Boolean logic here. So all right, so I kind of use this AND node here to group, you know, the ADX with the SMA, which is kind of what which is rule number 3, right? So we need the ADX sloping up, and we need the slope of the SMA 8. All right, so I have this AND node to join these two indicator conditions together, right? And then the traded system itself, you had to take rule 1, 2, and 3, and they all had to be in agreement, which means you need to use an AND node. So you could do something like this, right? And that tells you when we have rule 1, 2, and 3 in place, right? So far, the only thing we're missing now is looking for the volume spikes on the volume oscillator here. So, okay, but getting back to the AND nodes, right? So you notice I've got 2 AND nodes. So this is perfectly valid to do this, but you can, but also what would be valid is when you have an AND node connecting into an AND node like this, it's really the same thing as just having one AND node. So you can just connect everything into one AND node and get the same results. So really we can just take this AND node, kill it, and feed everything into just the one AND node. And so that's the same type of logic there. So, and that's only true, yeah, that's true for AND nodes. It would also be true for OR nodes. So I'm getting a little off topic here, just covering some quick Boolean logic. But if we have, let's just kind of do this here. But say, you had rules and you did something like this. Well, if you have one OR node connected into another OR node, it's really the same thing as just having one OR node, right? So you could get rid of this OR node back here and just connect your other solvers up into the one OR node, and there you go. So, but if you do like, if you like kind of keeping your logic grouped up separately, such as this is perfectly fine to do this. I know that for me this looks, a little more like how my rules are written. So to me this looks a little more logically organized, I should say. Yeah, maybe organized, right? Because I can then go, well, you know what, this is what should I call it? I'll call it rule number 3, right? So I know this AND node is rule number 3, and right. So if I look at how, I got things written out, right? Rule number 3 here. So if you like grouping your logic the same way you might have your rules written out, this is perfectly fine as well. Okay, so let's get to rule number 4, looking at the volume oscillator. Alright, so this part's a little subjective in the article. This is a little subjective. There were some, in the article, there was a statement made that, that the author only uses this system on stocks that have a volume, over so many million, so he only trades high volume or high liquid stocks, and looking for the volume spikes. Essentially, what the article just kind of summarized. The article said, just kind of look at like a broad picture and just kind of get kind of an average of what looks like a good volume spike going across. So you want to weed out you kind of want to weed out this kind of stuff like this, these kind of meandering, kind of noise. You want to weed out the noise, and you kind of want to look for the spikes like that, right? So you just kind of eyeball it for each particular stock, right? So this finding these volume spikes, it's going to change for every stock that you look at. So every stock, is going to have a different amount of volume that trades on a daily basis. So this part has to be modified for each stock that you want to look at. So what I'm going to do is take a line and just kind of eyeball and find what looks like would be some spikes. So I guess that looks kind of good. So let's see what is the value there. So we're at about 4 million, 3.5 million. Yeah, I'll round this to 3.5 million. There we go. Okay. So we'll use 3.5 million here. And let's see. Alright, I'll just copy that number. So I'm going to use this number in my threshold solver. So I'm going to use a threshold solver that's to identify these spikes. Alright, so let's see, let's zoom this back out here. And alright, shrink things up again. There we go. Okay, so to find these volume spikes, I'm going to use a threshold solver and look for when the volume oscillator spikes above that 3.5 million threshold level. So let's grab a threshold solver, and that's connected up like so. Okay, so this is the volume oscillator, and this is going to be 3.5 set to 3.5 million. So, alright, so let's set this indicator. Set to the, well, excuse me, we'll set this indicator to the volume oscillator, and there we go. And the settings that was used is 1 and 20. 1 and 20. Alright. And now for the threshold, we're going to paste in that 3.5 million value. And so we want an output, we want a long output. So these volume spikes, are, you can get a volume spike on a downtrend and on an uptrend. So once again, volume has nothing to do with direction. Right? Volume is non-directional. So we want to get a long output when the indicators spikes above 3.5 million, and we also want to get so there's our long output, but we also want to get a short output when it spikes above 3.5 million, right? Because it's non-directional, right? So that volume could mean could be a buying volume spike, or it could be a selling volume spike. So we need both a long and a short output. So and basically rules 1, 2, and 3 are the rules that are kind of determining the trend for those volume spikes. So so rules 1, 2, and 3 will filter out the volume spikes, so that the volume spikes become either long or short. Right? So now the last step here is we'll connect that up, and there's the signals. Right? There we go. So that's rules 1, 2, 3, and 4 all met. So alright, so that's right. That's all 4 rules met. So that's designed to kind of give you the heads up, that that a trend move might be coming. Right. So that's normally what a lot of people use BloodHound for, is just tell me when all my rules are met. But we can also use BloodHound to get additional information out. So let's kind of go back here. Yeah, this just so happens that this happens to be a good good spot to look at, right? So we can see we got a little volume spike. We got a gap down on that day and a little volume spike that kind of initiated that, hey, there could be a short trend coming here. And all right, so let's say you short this stock, and you'll want to know, if the trend and momentum are still in your favor. But so the way you can do that is you can just keep an eye on your indicators, right? You can look at the CCI, you can keep an eye on the Keltner channel, you can keep an eye on the ADX, right? You can eyeball those things manually if you want, or you can use BloodHound to tell you that, hey, your ADX is still rising, it's still sloping up, which means you're still in a trending situation. You could also use BloodHound, right, to look at the CCI condition, and you can also use BloodHound, right, to look at the Keltner channel, price versus Keltner channel condition. Right, so let's bring that up here. So here's kind of the key point at what this example today is to show you, is that we can also get BloodHound to tell us when 1, 2, and 3, when those conditions are still being met, after you initiate a trade. So let's build that part next. Let's slide that over there. So what we're going to do, right, so this AND node here, essentially it's giving us the signal, right? It's kind of giving us, right, the trade signal here. So we'll just name this guy as the trade signal, like so. And so let's grab another AND node here. Right, and we're going to plug rule 1, 2, and 3 in. Right? So 1, 2, and 3, if we look at this, so after the trade signal, let's mark that again. So we had the trade signal right there on this bar. And so we can see if we look at BloodHound's output, all right, it's telling us that rule 1 is still true. Rule 1 is still in a downtrend. The CCI is still in a downtrend. And the ADX is telling us that we are still trending. All right, so we got, so rule 1, 2, and 3 are still in place. And then it finally ends. Let's see, and so rule 1, 2, and 3 finally end, right about there when price starts to kind of consolidate a little bit. So, so how can we get both of these to show up at the same time? Can we get, let's see, let's shrink this up here a little bit. So can we get BloodHound to tell us the trade signals and tell us, that we're still in this nice momentum trending situation? And the answer is yes. So we've got, all right, so we've got two pieces of information here coming out of these AND nodes, and we want to see these both at the same time. So what we can do is we can use an OR node and feed these back. Now when we do this, well, look, we're just getting racing stripes, right? Signals the entire time. So the key is, what I want to do is I want to take this this AND node, and so let's name this AND node here. So let's say we'll just call this trend and momentum. I'll just call it MOMO for short. So trend and momentum. So if we look at this OR node, right? So I have this OR node selected, right? We can see that everything that's plugged into that OR node, right? We see these sliders here. So we can see one slider is called trend and Momo, and the other one's called the trade signals. So here's a practical use for these sliders. Here's one practical use. So I can take the trend and Momo and slide it back a little bit. Let's go to 0.6. I'll go to 0.6. And so now, if we look at our chart, you can see we get a racing stripe when all four rules are met, but then BloodHound's also giving us this partial output that tells us that the trend and the momentum are also being met as well. Right, so when we look at BloodHound's output here, let's shrink up the chart, right? So we can see, like, let's look over here. So we can see over here, right? There was actually no, there was no trade signal. There's no trade signal. We did get a volume spike, but then the trend and momentum kind of lined up too late. Right, a couple bars late. But we can see though that rule 1, 2, and 3, we're all true. We're all being met as price made this this up move here. Right, so here we can see we've managed to set BloodHound up in a way to give us two pieces of information now. So you got your trade signal, and then we also have BloodHound telling us when we have trend and momentum in alignment. All right, so this system was built for a daily, for trading stocks on a kind of daily basis, right? At swing trading or something like that. But this could also apply for day traders as well, right? You could use BloodHound to give you your trigger for your day trading signal, and then you could have BloodHound kind of tell you. Of course, it depends on your system if your system works for this, but you could have BloodHound tell you if trend and momentum is still working with your trade, or maybe if this was a day trading system, maybe one of the indicators didn't quite meet all the conditions, and so it didn't fire an actual trade signal off. But if you saw that, hey, momentum, trend and momentum, and whatever you might be using for your day trading system, if you see that, hey, this is, that part is being met, even though you didn't get an official trade signal, but you can see that, certain other indicators, that are a part of your trading system are all in alignment, then you might decide, hey, maybe I should just manually place a trade, even though technically all your rules didn't come together. But BloodHound might tell you that, hey, if price action looks like it's good, then maybe I might want to just jump into a trade anyways and get in there. So and yeah, let me kind of go back here. So going back to the slider here. So I can use this slider to tell me, I can use this slider to adjust BloodHound's output here. Like I can make this trend and momentum, really tiny. And you can adjust to play around with this, right? So you can see I made the trend and momentum output here a lot smaller, if that's what you kind of prefer. Now if we look at that, so you can use this slider here to adjust how large of an output that you actually get. But the key is that you take one AND node then plug in all the solvers into one AND node. That's going to tell you, your trend and momentum. Or this could be anything else. This doesn't have to be trend or momentum. Obviously, the trend and momentum is just an example now that I managed to come up with. But basically, the trend and momentum is like a subset of your rules, right? Part of your rules that are key, that are important to your trading system. And then you have another AND node, which is basically your trade signals. So that's the two key components. Plug them into an OR node, and then use the sliders to adjust down, the subset of your other trading conditions. So really the only difference between, like in this example, the only difference between this trend and momentum and this trade signal AND node, the only difference is this volume oscillator, right? So in this stocks and commodities example, the only kind of key thing was looking for these volume spikes, right? This is kind of what triggered off the trade with those volume spikes. And so that's what was left out of this, was the volume spikes, right? So when you see, this output from BloodHound, that really this is just missing the volume spike information. And then when you get the racing stripes, well, those racing stripes are including the volume spike information. So that's how it works out for this system. But let's see. Yeah, I think that about does it. That's what I wanted to show you, is how you can use BloodHound to give you two pieces of information here. So you get the trade signals, and then you can have BloodHound show you when other parts, right, a smaller subset of your rules are all being met. So, all right, so we're going to go over the solver price functions. So I think a comparison solver illustrates this the best. So what we're talking about is the price, right? All these price options here. So how do you use these price options here? All right. Now, you'll notice if you set the look back period, if you set it to greater than 1, so I'll set it to 3 here, you'll notice basically a subset comes down, right? A subset comes down, and then there's even more options down here with the subset. So we'll kind of go over all that stuff, and you notice that. So we have price type long and price type short, and you can set different prices for long and short, and what does long mean, and what does price type short mean, and stuff like that, and what does this look back mean? We have a long look back processing. What do all these things mean here? So all right, so before we get started here, keep in mind that all this information here, all this stuff is there is a help guide on all this stuff. So all you have to do is, if we click on help, we can go to documentation. All right, bring up the website, and if I scroll down, right under BloodHound reference, we can see here's an indicator comparison, right? So here's the comparison solver information. I can click on that, and if I scroll down, we can see here under input A. By the way, this I updated the website ahead of time, but in the next update here, instead of calling this section indicator A and this section indicator B, we're gonna rename it to input A and input B. So that's why this says input. So I already got kind of a head start on the documentation here. So All right, so this used to say indicator A, but we're going to rename it to input A. And right, so under type, let's see, let's get back to BloodHound, right? So we changed the type, right? So under type, you have all of these settings. For every solver has this type, and you have all these different options, right? So if you want to use an indicator, you put it on an indicator volume value. All right. If you want to use like a fixed value, such as 0 or 100, you can put a fixed value in there. And there's some other stuff in here. But so all of these options here under the type, all those options are common to every solver. So there's a section of the documentation dedicated to that. And so, right, so we can just go to this section on data type selection. So if I click on that, it'll take me over to this page. And so we have, right, so we have common solver controls and we have data types. Right, and if we scroll down, you'll see right here, here's the fixed value, right, there's price. If I keep scrolling down, right, volume and indicator, right, all the options that are available down here, right. So what I wanted to point out to you is price. So if we go to price, right, you can see there's a big long section here on all the price settings, right, all these parameters here, because there are quite a few parameters, so there's a lot of settings there. So this stuff is already up here. So I'll just leave it right there. All right, so let's start going over this stuff here. So the first thing you'll notice probably is that you'll see there's a price type long and a price type short, right? So why is there a long and a short? Well, as you know, BloodHound gives you either a long condition or a short condition, right? Green or red. And so when you're working with price, you see me quite a bit use one price. So say like we might use the high price of the bar to determine, a long condition situation, and then usually if that's the case, if we're using the high price to determine a long condition, then the short condition, most of the time I'd say people typically will use the low price of the bar to determine a short condition for their rules, right? So let's see. So let's just look at the longs here. So I've just set this solver up pretty simply. Let me set this back to 1. So for the long condition, what we're looking at is if the high price is greater than the closing price, then we're going to get a long output here. So we have, according to how the outputs are set. And if we look here, right, the only time we don't have a long output is when the closing price of the bar equals the high of the bar, right? So basically we've kind of identified whenever there's a upper wick. So if the bar has an upper wick, right, we're going to get a long condition. Just as an example here. And then if we look at the short output only, then what we're looking at is if the low price of the wick is less than the closing price, right, according to our short output, right? We have a short output of A less than B. So this is what we're using for the short output. So if there's a short wick, if there's a wick on the bottom, we're going to get an output there And yeah, there we go. So there's a couple of bars with no output here. So yeah, take a look at this. Here's one thing that's really odd about oil. You see that? That looks like the closing price of the bar equals the low of the bar. Right there and there. But this is something that's really weird about oil. I should probably put it on the ES, but oil will trade in tenths and hundredths of a tick. So just because you see, a bar like that where it looks like the close equals the low, visually it looks like it is, but technically it's not. It looks like a trade came in here, and yeah, a trade came in here that was in like a hundredth or a thousandth of a tick. Yeah, oil is really weird in doing that. So let's see. Let's go to something like the YM. Yeah, the YM doesn't have ticks. So if we switch over to the YM. And well, it looks like it even happens on the YM. Interesting. Yeah, I'm still seeing some places here where it looks like the close equals the open, something like that. So yeah, this is kind of one of the weird things about price data that comes in. It doesn't always come in on the tick. Prices will come in a tenth or a thousandth or a hundredth thousandths of a tick. But NinjaTrader rounds it all off when it shows it to you, but internally it's not rounded off. So, alright. I'm getting a little off topic here, but this is still kind of good stuff to know. So to kind of compensate for odd prices that will come in from time to time, prices that come in, in a tenth or a hundredth of a tick, what we can do is just do something like that. Just go 0.1 tick. And that'll kind of compensate for it. So, and let's see, or it should. There must be something I'm missing here. Oh, geez, sorry. Yeah, this is an up bar. That's what I'm missing. Sorry. Yeah, that's an up bar. So that should be, yeah, the close is up there and the low is down there. Sorry, that's what I'm missing. Yeah, okay, right. So this is a down bar. So there, the closing price equals the low. Closing price equals the low. Yep, there we go. Simple mistake, overlook. Yeah, so that's an up bar. So the closing price is up there, where the low is down there. So yeah, that's correct. Sorry, sorry for that confusion there. Let's see. Yeah, so whenever we have a down bar like that, and yeah, okay. But in any case, still, kind of pointing out the fact that using, instead of leaving this at 0, putting, like 0.1 ticks to kind of represent 0 is kind of a valid point, especially for oil. Alright, especially for oil. So, in fact, let's put it back on oil. And just kind of check here. I was just checking that little wick there. seeing if that was actually a one tick wick, because it looks really small when you look at the whole chart, but that one's okay. Let's see. Yeah, I may not find any actual examples to show you on today's chart. So, yeah. All right, well, I don't want to dwell on this too long, but yeah, that is something just to be aware of. Okay, so let's get back to the price, how these price functions work. All right, so back to the long, why there's a long and a short, right? So you might use a different price for determining, kind of a long situation when you're looking at price action, and you might use a different price for looking at a short, for determining a short condition. All right, so the next thing is this look back period here. So I'm trying to think of an example here to illustrate this look back period pretty simply. Let's see. Well, actually, yeah. Here, we'll cover the single value setting here, right? So when you have a look back period greater than 1, so if I set this to 2, you'll notice that you have these look back processing, right? So, right, there's a long look back processing. So for determining a long condition, for determining when the long output, when the long output, how the long output is calculated, versus determining how the short output is calculated. Right, so let's turn both. Let me turn both the long and the short on here. Right. So, I guess to kind of step back and explain the bigger picture of how BloodHound works. Right. So we have a price type long, a price type short. We have a long look back processing and a short look back processing. Right. So this long output and short output from BloodHound, those are two completely separate calculations. So BloodHound is calculating the long output plot as a separate calculation versus the short output, right? So BloodHound's always doing two separate calculations, two separate kind of streams of calculations here. So, right. So what that does is having BloodHound calculate the long separately from the short. That's what allows us to use a different piece of price to calculate the long output, and we can use a different price, right? A different price value to calculate the short, right? Also the same. Let's kind of grab another solver here. So once again, it's getting a little off topic, but I guess it's helpful to understand how BloodHound is working under the hood. What is BloodHound doing under the hood? So I just grabbed a slope solver, right? Just because the slope solver just has one indicator. And so the SMA, if we open up, right, the indicator select window, and if we look at an indicator, right, you'll notice that right in the select you have a long column and a short column. So because BloodHound is calculating the long separately from the short output, right, that's what allows us to take something like the MACD. So let's say we have something like the MACD, right? The MACD, we could use the MACD line to calculate the long condition, or we could use the average to calculate the short condition, right? So that's why you have this long column and short column, is so that you can use different indicator plots to calculate the long condition separately from the short condition. So um, right. So getting back to all the price settings, right? So so when you have a look back period greater than 2, you can have the long output processed differently from the short output. All right, so we have a single value, and notice that there's these others. You can calculate an average, or you can have BloodHound find the minimum value or the maximum value within this look back period. So, all right. So for now, let's just cover what the single value does. So if I set this to 2, and we only want to look at a single value, then what that does is, let's see, this is, yeah, okay, so let's mark this. Let me get my drawing tool set up here. All right. So this is the current bar. So this is, all right, this is the current bar. Okay, sorry, this is the current bar. So that's the current bar now. Let's slide that back. There we go. So this is the current bar. So with the look back period, with your look back period set to 1, you're looking at the current bar, right? The most recent bar. And with your look back period set to 2, you're looking, let me grab a piece of text here. Right? So this is look back bar 1, and this is look back bar 2. And as you might have guessed, that's going to be look back bar number 3. So, all right. So if we have our look back period set to 2, looking at a single value, then what we're looking at here, right? So so the long and the short, they're both set to look at the closing price. So what indicator B is set to look at is 1 bar back, bar number 2 back, and it's looking at just the single value. So that means that BloodHound is looking at the closing price of the bar right there. Right, that closing price. And let me use something a little different there. There we go. That green contrasts a little more with the orange. So the way this solver is set up is to calculate the long output, we're going to look at the high price. So we're looking at the high price there for the long output. Let's draw an arrow. Let's stretch this way out here. There we go. And let's set the colors up for this arrow. There we go. All right, so for the long output, we're looking at the high price here, and we're comparing it to the closing price with a look back period of 2. In other words, so the previous bar back, and we're looking at just the single value. So it's just going to be just the value of the closing price looking at 1 bar back. So this is how this solver is set up. And for the short, to calculate the short output for BloodHound, we're looking at the low price of the current bar, right? So we're looking at the low price of the current bar down there. And we're comparing that to the closing price of one bar back. And there we go. Right, so this solver or BloodHound is doing two separate calculations, right? It's doing this calculation of the high price to the closing price for the long side, and then it's doing a separate calculation for the short output, looking at the low price to the closing price. So, right, and right, so that's with a look back period of 2, looking at a single value. Now, if we set this to 3, then, as you guys might have guessed it, now BloodHound's doing this kind of a comparison. Oh, and I can't grab that arrow. There we go. Right, so we're looking at bar number 3 now. We're just looking at the single value of bar number 3. And, of course, if I go to 4, so forth and so on, then we're going to look at the closing price of bar number 4 back there, of course. So that's what the single value does. Right, the single value just grabs the value from that bar, so many bars back, whatever you set the look back period to. So really, this look back is really, it's not a period when you're using a single value. It's really just a look back. Now these other settings in here, if you use average or min or max, then you're actually using the look back as a period. So let's take a look at we'll take a look at the max first. And well, actually we'll look at both. So for the long, to calculate the long output, we're going to look at the maximum value with this look back of 4. All right, so we have a look back of 4 now. So a look back of 4 means with this max value, so the max value is going to look at bar 1, bar 2, and let's there we go, stretch this out. Okay, so bar 1, bar 2, bar 3, and bar 4. So BloodHound is going to look at all 4 bars. All right, so we're looking at all 4 bars here, and we're going to find the maximum value within those 4 bars. So as we look at, all right, and we're looking at the maximum value of the closing price. All right, finding the maximum value of the closing price. So, let's see. Yeah, so we have a close there, a close there, a close there, and a close up here. So it looks like bar number 4 has the maximum value of those 4 closing prices. Right? This has the highest value here. So BloodHound's going to, well, not BloodHound, but what's going to be used to calculate the long side, what's going to be used is this price value here, because the bar number 4 has the maximum value of these 4 bars here. So this is what is going to be compared. So this solver is going to compare the high price of the current bar, right? This is still bar 1, to the maximum closing price of the last 4 bars, which is up here. And so we can see that, right, this low price is actually less, it's lower than this closing price here. And so that's why there's no long output. All right, so this is looking, so that's how the long output is being calculated. And since this high price is less than the closing price, than the maximum closing price, there's no long output, right? You'll notice that we're missing a long output there. And that's because the high price is less. And even on this bar. So let's say if we made, let's see if I can do this here. That's a bummer. I can't select multiple things in with Ninja, but let's just slide everything back. Uh-oh, what happened there? Oh, there we go. All right. So if we slide everything back, so we make this, you know, if this was the current bar, and we look at this, you know, and look at what all the calculations that were being looked at here. If this is bar 1, so here's our high price for bar number 1, and so down here we need to find the maximum value of the closing price of looking back at the last 4 bars. And so it looks like this right here is the maximum of the closing prices, right? So we got closing price down here, bar 1, bar 2, bar 3, and bar 4 has the maximum value of the last 4, with a look back period of 4, the last 4 bars. That's our greatest value. And so what the comparison solver is doing is it's looking at comparing the high price and seeing if that price is greater than the maximum closing price. And it's not, it's less. So once again, we're missing, there's no long output. So, right, we don't get a long output until we get back here, until we get to this bar. So let's move everything over to here. All right. So if this is bar number 1, if this is the current bar number 1, right? So we've got the high price here, and now let's find the maximum of the closing prices. So there's our closing price, there's our closing price, and right there, and right there. So it looks like bar number 2 has the greatest closing price value. And so the comparison solver is checking, you know, is this high price greater than the maximum of the closing prices within the last 4 bars? And it is, right? So the high price is greater, and so that's why we have a long output here. So if we go back, if we go to this bar, just to kind of show you quickly. So now, if this is bar number 1, so I'll just kind of take a shortcut. If that's bar number 1, well, now this closing price, you know, of the last 4 bars is actually greater, so that's why there's no long output. All right, so that's kind of what the overall picture is doing, but hopefully you understand what the max value is doing, right? The max value is simply just looking back the last 4 bars, and it's finding the maximum value of whatever we're looking for. So so let's see what would happen. What would happen if Let's just focus on the long side again. Let's just focus on one side here. So I'll just set this to long only. So if we take the price type long and say if we set this to the high as well, let's see what happens. So it looks like we get nothing, no output at all. All right, absolutely no output. So the first question you ask yourself is why? Why don't I get some kind of an output? Well, okay, let's break this down and we'll look at what the solver is actually doing. So let me get my chart set back up. Alright, so the question is, why is there no long output when we compare the high of the current bar to the high of the last 4 bars, and we're trying to find the maximum value of the last 4 bars? So, well, one obvious answer is, here, let's just adjust things here. Right, so there's our 4 bars. So we can easily see that, well, of course not. So this high is less than this high. So this is the maximum high of the last 4 bars, right? So remember, our long look back processing is still set to the max. So indicator B is finding the maximum high price. So if we're looking back, so if we're looking at these 4 bars, right, this bar here had the highest. So obviously, you know, this high price was less than this, so there wouldn't be a long output. But what if we go back to this bar? So let's just adjust everything over here again. Alright, so we've got our 4 bars. So here's the high of the current bar. And if we look back 4 bars, well, which is the highest bar? Well, bar number 1 is still the highest bar. So of course the high of the current bar is never going to be higher than the maximum high of the last 4 bars. Because bar number 1, see, bar number 1 is included in this look back period. Always remember that. So the right, bar 1 is always included in this look back. So therefore, if bar number 1 has the highest high price, it's never going to be greater than the maximum high, you know, of any look back period. So yeah, so yeah, usually comparing, you know, finding a high, looking to see if the high of the current bar is greater than the high of any other bars back. Now that type of calculation is never going to work, because bar number 1 is always included in this look back period of 4. So if however you want to compare the current, grab the other one there. So if, however, you want to compare the high of the current bar to, say, the high of the last 3 bars, and let's just change this color here. Yeah. Now, say you want to compare it to these last 3 bars. Well, there is no starting point. You know, there's so this, yeah, the price functions don't have a way to say, okay, start 1 bar back and then start your look back period 1 bar back. Yeah, it doesn't have a way to do this. So if you do want to do something like this, then what you have to do is you have to use an indicator value, and you can set your displacement to 1, right? So when you use a displacement of 1, that basically means, you know, start 1 bar back. So with a displacement of 1, really you're starting this becomes your first look back. So the bar numbering is going to be something like this, right, with the displacement set to 1. So if the displacement is set to 0, which is normal, then basically this becomes bar 1 again, right, like so. So if you want to compare the high price to like the last 3 bars high price, you do have to use a displacement of 1. So this becomes like that. Let's get that out of the way. And then for you guys who have had BloodHound for a while, you'll remember that the old way of getting price data is that we used to use SI Chameleon. So we're going to use Chameleon here as our indicator, and you'll notice that Chameleon has all of these this price data here. Right. And so we can use Chameleon to calculate the highest high, or we can use Chameleon to calculate the lowest low. So I can grab the highest high of, see, you'll see Chameleon has a look back, so I can set it to 3. So this look back of 3 is basically, right, looking at these last 3 bars here that I have numbered. And Chameleon will actually calculate the highest high of those last 3 bars for us within this look back. So that's why Chameleon has this bounds, right? Or I should say the high is labeled bounds, the low is labeled bounds because you can find the lowest low bounds, but all the other price data, which is like inside the bar, right, the midpoint, the open, the close, you know, those are actually SMAs. So so Chameleon won't calculate the highest midpoint or the lowest midpoint. It's going to calculate the SMA, right? But so let's right. So let's set a look back period of 3, and we'll calculate. So Chameleon will calculate the highest high within a 3 bar look back, and Chameleon will calculate the lowest low within a 3 bar look back. Right. So we're going to use the high price to calculate the long output, and we'll use the low price to calculate the short output. And there we go. So you can see we do have on bar, well, let's see here. Well, yeah, so this bar here, remember this is the current bar, so its high is higher than the bars in here. And so that's why we have a long output. So that it is higher than the highest. So this would be the highest of the last 3 bars. And so the solver is saying, well, yeah, this high price is actually higher than those last 3 bars, and that's why we get a long output. Right. Now if we go back, if we move everything back a bar, like so, shift everything over, let's get everything, there we go. So all the little drawing aids are set up. Okay, so now if this is the current bar, right, here's the high, oh, I'm sorry, oops, the high is down there, here we go. And so now we can see this high is actually lower than the highest high of the the previous 3 bars. And so that's why there's no long output on that bar. Right. So, okay. So let's go back to the price information. All right, so that's what the maximum is doing, right? It's just simply finding the so in this case, if let's put this back to the close price. So a maximum value is going to find the maximum closing price. So let's see, if we look at all our closing prices, that's going to be that right there. All right, so the maximum value, that would be, right, this closing price out of these, oops, there we go, let's adjust the numbers here again. Yep. So within our 4-bar look back, right, so we got a look back period of 4 still. And if we're trying to find the maximum, the greatest, or the highest, essentially the maximum would be the highest closing price. So that's going to be this guy up here. That's going to be this value up here. And so for the short processing, look back, the short look back processing, it would be finding the minimum value of the closing price. In other words, it would be finding the lowest closing price, the minimum value. And so that would be, let's see, so there's the closing price right there, there. So that would be this one. So bar 4 would have, let's grab a line here, there we go. So bar 4 has the minimum closing price within our look back. Right, so that's what the minimum is going to do, is it's going to find the lowest, right, the lowest closing price. So let's see. All right, so we covered what a single value does. We covered the max and the minute, and then the average. The average is a little harder to visualize, but the average just calculates, the SMA of, it's going to calculate the average value of, the 4-period look back. So an average value would calculate what the average value is of the closing price for the last 4 bars. So essentially, that's what the SMA does. The SMA just calculates the average of whatever, price data you put into the SMA. So, so I'm kind of guessing here, looking at the closing prices. Yeah, I'm kind of guessing the average closing price would be somewhere around there. Just kind of eyeballing it, looking at all 4 closing prices of these bars. It's probably going to be around there somewhere. So, yeah. Let's see. And of course, you could calculate the average value for anything. So, if you want, you could calculate the average value for, the median price. So if you wanted to use the median price of bars, and you wanted to take the median of the bars, that's what the average value for the median price would do. Or of course you could find the minimum value for, the median of all the bars. So let's see, the minimum value of the median price. So I'm gonna try and guesstimate here. So let's put the green dot on approximately what the median price would be. There we go. Alright, so the green dots approximate what the median price would be. And so if we took the minimum value of the median, I'd say clearly this bar here has the minimum value. And so that's what, so this is the price that would be used for calculating the short side, right? The short output. Now the long output, it's going to use the median of the last 4 bars, and it's going to calculate the average of the median. So my guess would be, right, the average of these green dots, right? So remember these green dots approximate the median price of the bar. So probably right about there is the average value of those 4 medians. Right? So this price value is what would be used to calculate the long output, and then this minimum, right, the lowest median price is what would be used to calculate the short output. So, okay, well, I think probably covered this as much as I possibly can. And let's see. I'm just looking at the board, see if there's any questions on this. Let's see. All right, no, I don't see any questions on this topic. All right, but let's see, I do have some questions that have come in. So, all right, let me switch gears here and move over to your guys' questions. Yeah, let's see, I'll clear that out later. All right. Okay, so Terry, before I get to your question, I'm going to just answer a couple of simple questions here. Let's see. Let's see. Kevin was asking, can you run a quick test to see results? Gosh, I'm sorry, Kevin. I'm not sure what a quick test on what. I'm guessing. I didn't see your question soon enough there, Kevin, so I'm not sure what you wanted me to test. I'm guessing maybe the stocks and commodity system. Is that what you wanted to see a test on? Yeah, okay. Sure. Okay, Kevin, we'll run a test on that after I answer Terry's question here. Let's see. All right, so Steve is asking, do the indicators from the wizard on Big Mike's work with BloodHound? I have no idea, Steve. To be honest with you, there are thousands of indicators out there from NinjaTrader, and there's no way that we can test all 1,000 of those indicators. So there's only a handful, that have been tested with BloodHound. And there are hundreds and hundreds of indicators on Big Mike, so I have no idea. You'll just have to simply do your own testing to see if they work. And so there is a video, Steve, to show you how to do some testing. So let me bring up that video for you. All right, so let's let's go to the home page here. All right, so you're on our home page, Steve. So we'll go to support, down to Learn BloodHound, and let's see. It is in the tips and tricks. Yeah, there's a video inside tips and tricks. So site tips and tricks. Let's see if we scroll down. Let's see, time session solver. Nope, not that one. Here we go. How to analyze custom indicators in BloodHound. So here's a video that was done back in 2012 for that. So there's one video. And I've also done a couple of recent workshop videos here as well during the workshops for analyzing custom indicators. So let's see. So if you want to find the workshop videos, let's see. Let's go to. There we go. We'll go to YouTube here. All right. So I'm on YouTube. All right. I'm on YouTube. Type in BloodHound Workshop, and then let's see. Let's just look for custom indicators. So see what turns up there. So I'm just looking through the descriptions down here to see. Yeah. Let's see. Let's see. This looks like this is just a 2-minute. Yeah. This is just 2 minutes. It's here. Where to learn how. Okay. No, that won't be it. All right. Let's try the third one down. Oh. Oops. Let's see. Here we go. BloodHound Workshop, analyzing third-party indicators. There we go. So okay, so I called it third-party indicators instead of custom indicators. Let's look at this. Yeah, this is more recent. So this was done in April of 2013. Yeah, there's no timestamp, but yeah, but somewhere in this video, I guess it'll have just another look at analyzing third-party indicators. So there's another video there. Trying to see if there's any others. I think, yeah, this is the one from our tips and tricks, probably. Let's see. There's another. Let's take a look at another spot here. So on our website, right? On our website, this is the workshop page. So to get to this page, go to support and training workshops, right? So we click on training workshops. That takes us to this page, right? This page has a master list of everything, and so you can do a find, a search on this page. So if you hit Control F on your browser, let's just search for the word indicator, because I'm not sure if it's going to be called custom indicator or third-party indicator. We'll just search for the word indicator, and right, so we can just search through here. Let's see, no, not that. Yeah, maybe let's try searching the word analyze. Let's see, strategy analyzer. That's not what we want. let's see. Oh, there's the same one that we found. How to analyze custom indicators. BloodHound. All right. Well, I guess. Yeah. When I did this again, I kind of showed some other ways to analyze third-party indicators, see if they work or not. They might have been too minor to kind of mention, to make note of in these recent workshops. So I guess, yeah, so what I'd suggest again, Steve, is just go back to this this tips and tricks page here. So let's see, once again, go to support, learn BloodHound, and tips and tricks. So under the tips and tricks, so in this section here, if we scroll down, you'll see here how to analyze custom indicators. So that's, yeah, that's, that's kind of the official, so that's the better video to watch right there. Okay, all right, so Terry's looking for a special candle where the lower wick is about 45% of the entire candlestick. So let's see if we can find something like that. Oh yeah, bingo, got one right here. Right there, there we go. So you see how the lower wick is really long compared to the entire body. So that wick there is at least 45% of the entire bar. All right, so let's see. So we can, so we can get BloodHound to identify, this bar. So using all that price information there that I just talked about. We can check to see if the wick of the bar is 45% of the entire bar. But so identifying that bar is the first, is one step. And let's see. So the next step is to get a trigger to go short if price, if price goes below the bottom of that trigger bar. And let's see, within the next 30 bars. So here's kind of the next key part, is you need something to track the low price of that bar and basically track that price and extend it forward for 30 bars and basically wait for price to cross below it. Yeah. So this is the piece that's missing here, Terry, is BloodHound doesn't track prices, right? That's what indicators do. So you need some kind of an indicator that's going to hold on to that low price when this happens. All right, so BloodHound calculates long and short signals. BloodHound does not track prices for you. That's what indicators do. So, for example, let's put Chameleon on here. So one of the neat things we added to Chameleon, right? Remember I was showing you earlier, we have the high bounds and low bounds here, right? High bounds and low bounds. And let's see, let me change the color there. And so let's set a look back of 10. And just a moment. My settings. got changed. I'm going to change this to hash. There we go. That ought to work better. And let's make this a little thicker. Yeah, that's what I want. Okay. All right. So you see, Chameleon will track, price points. It takes an indicator to do that. So you can see how Chameleon's tracking that high high price, for 10 bars, for the 10 bars. And you can see down here, Chameleon is tracking the low price, looking back the last 10 bars. So, yeah, so that's kind of the missing piece there. Terry is getting an indicator to track that low price. So BloodHound, needs a plot from an indicator. So to tell BloodHound what that price is, what that low price is, and then BloodHound can check to see when a crossover occurs, right? So BloodHound can check to see if this crossover occurs. So BloodHound can compare the price to your indicator that's tracking this low price here and see if that crossover occurs. So Terry, that's kind of the missing piece there. That's needed. So, let's see. If you want, if you want BloodHound to find, these special wicks here, like this, yeah, that's already been done. So let's bring up the web browser here, and let's go back to YouTube. All right, so here's YouTube, and let's see. Let's see. Let's see what that search term comes up. There we go, detecting bar wicks. So maybe that's the one. Let's look down here, looking down here in the description. Let's see. Nope, that wouldn't be the right one. Let's see. Let's see. Try percent of wicks. Yep, here we go. Here's the one here. So the first topic, how to detect certain candle wicks in ticks or percentage of bar length. So there you go. All right, so May 4th, 2014, Terry. So, right, so this video here, this workshop, detecting candle wicks. All right, we'll show you how to at least identify that bar, those bars, and make things a little easier on you. All right, by identifying these long wicks here. All right, so and let's see. There was another component to Terry's question. Let's see. He's using the EMA 20. Okay, yeah, so Terry wants to look for a steep slope in the EMA 20. Okay. So that's another component there. All right, so let's kind of go over what we can with BloodHound. So let me draw this line on here again. And let me get rid of chameleon. There we go. Okay. So, let's see. One thing that Terry's looking for is kind of like a steep fall right in the EMA. So we can use the slope solver to find this steep fall. And Terry, you know, when you get an indicator that can track the low point of this bar, then we can use a crossover solver to see when price crosses your indicator plot that's tracking the low price of that bar. Right, so that's the two components there. No. So let's see, let's get BloodHound open here. Alright, let's make a new logic board, and let's see. Not sure what to call this. Let's see. Oh, let's see. Call it a high slope. Right, and crossover. Right, so let's find this high rate of slope. Let's connect that up. We'll change the name here, so let's call this an EMA, using an EMA 20. Alright, let's change our indicator to the EMA. Alright, change our slope to 20. Alright, there we go. So, right, BloodHound is long when it's got a steep, or when the EMA is rising, right, we get a long output. When the EMA is falling, we get a short output. So if we want to put a steep slope in there, you know, I'd say start with something like 1 tick and see how that looks for you. So it all depends on the instrument that you're looking at. So like oil, you know, a 1 tick in oil is 1 penny. So that's a very small movement in price versus something like the ES, right? The ES has quarter point ticks. So there's only 4 ticks per point on the ES, but oil has 100 ticks per point. So on oil, you might want something, well, I don't know, maybe 1 tick works pretty good actually, maybe on oil. Right? I don't know, I mean, this is a little subjective over here. You know, you could say that maybe that's a little low for the slope. That's not as steep as it is back there. So maybe on oil, you know, maybe 2 ticks will work. Let's take a look at 2 ticks. And there we go. So 2 ticks, yeah, really finds a steep slope here for oil. Now let's see how that looks on the ES. Let's switch over to the ES. And I guess that works okay on the ES too. Well, I don't know. You know, obviously this is subjective to what you consider, you know, a steep or a high slope. You know, I mean, to me that slope looks pretty steep. All right, so maybe 2 ticks is a little too much for the ES. Let's go back to that solver. You know, so maybe the ES, you might want to go back to 1 tick of slope here. So let's see what that looks like. Yeah, there we go. So 1 tick, you know, might look a little better to you. So, all right, it's all kind of subjective. Just have to play with it a little bit. for the instrument that you're working with. So there's your first part, is finding, as Terry puts it, a fairly high rate of slope. So, yeah. And let's see. Let's put it back. Need to put it back on oil. Okay, there we go. All right, now your second condition there, Terry, finding these candles with a long lower wick, right, tracking that. So I'd say that really probably needs to be done in an indicator. You could have the indicator detect the wick, and when it detects that wick, it can then track the price, the low price of that bar for you, and plot that out. It could plot it out similar to how the SI Chameleon plotted out, the lowest low of the last 10 bars, or the highest high of the last 10 bars, as I showed earlier. So your indicator could plot that out, and then you would have to just use a crossover solver. And so, right, so with the crossover solver, you're going to check to see if price, crosses your indicator. So whatever your indicator is going to be there. So I could just I could throw in Chameleon just to throw something in there, but Chameleon's not going to do what you want it to do. But I'll just set the look back period to 30, something like that. So here's something that's missing, Terry, is when you're looking for the steep slope in your EMA, does that steep slope come first, or does that steep slope need to happen when price crosses the low of that wick, right? So the timing of things is pretty critical. So if you're looking for a steep slope back here when this candle forms, then what you have to do, right, you can see, so the solver is gonna give you, right, a short output way back here, but well, let's see, okay, hold on, let's adjust this guy here. Let's adjust this so it makes a little more sense. Okay, so there we go. I changed the slope requirements there. So we have a steep slope here, which happens which happens before your candle, but obviously the trade trigger doesn't trigger until price crosses way over here, and of course we can see that the EMA is not very steep. It's not steep enough to count as your fairly steep move on the EMA. So if you're looking for a steep move back here, well, you need to get this slope from the EMA, which is way back here, and you need to pull it forward until you actually get the price crossing your price crossing the low of the wick, right? Because this actually fires off the trade. So this is your actual trade trigger. So you need to get the output from the solver that's way back here and extend it forward to here. So if that's what you're doing. So this is kind of some of the information that I'm missing here from you, Terry. So so if if your steep slope happens back here, then you'll need to use something like a look back period. And what you can do, let's see, we'll turn the displacement off and essentially set the look back to 30, and the mode, instead of using the average, once again, look, so you notice how there's a look back period, right, which is the same as what I was showing you guys earlier. And the look back mode, there's an average, max, and min, right? There's an average, max, and min for the look back, right? So these max, min, and average for this look back mode is doing the same thing as what I kind of showed you earlier. But in this case, we're going to use the max here. And so what this look back did, right, is it took our slope, it took the output from the slope solver and extended it forward in time for 30 bars. So even over here, when your trade trigger occurs, you can see we have a short output with this trade trigger, and then that would fire off your signal when you get this crossover. So all right, let's see what else we got here. All right, so Kevin, we're getting back to Kevin's question about doing a backtest result on that stocks and commodities system. Well, let's see. I don't have a lot of stocks to test this on, so I think this backtest is going to be worthless, because this is just one stock and thousands of stocks out there. But let's see here. All right, so we have ExxonMobil, and I think I put 10,000 days on this chart. Yeah, so we have 10,000 days on this chart, and so let's do a back test. Actually, let's see. I'm going to do something different here. Let's pull up the strategy analyzer. All right, and let's do an optimization here. So we can optimize the profit and stop loss targets. So we'll set our strategy to Raven, and we'll just start setting Raven up. Alright, so let's load up that template. There's our template. And let's just take a look at the logic. Alright, yep, it looks good. Okay. So let's set the entry logic. There we go. And okay, so there is no exit on this. And we want to do a back test. So to do some back testing, we have to take the start auto enabled, set that to true, and then the back test mode is possible, and so that's set to true. So there we go. And so let's see, in the strategy analyzer, let's turn the chart trader off, because you get some weird things when you get chart traders turned on. So for the strategy analyzer, turn the chart trader, turn that off, set it to false. And the next step is let's set some profit targets. So let's since we're dealing with stocks, let's see. That's right. There is no points for this. Let's see. Yeah. Hey, how about if we? Yeah, we're dealing with stocks. So every stock, kind of has a different volatility to it. So let's use ATR to adjust our, our profit and stop loss. So let's see. Let's do a profit target going from, let's say, 2 ATRs to say 6 ATRs, and now let's just go to 5, and we'll do an increment of 1. So I was going to do an increment of 2, but we'll leave it at increment of 1. And let's set our stop loss to 1 ATR to, I don't know, maximum of 3 ATRs with an increment of 1. So I'm just gonna I'm setting up a very small range here just so that it calculates quickly, right? We don't want to be sitting here for half an hour waiting for NinjaTrader to calculate all this stuff. So just set up a small range. And alright, so the next thing is that we got to set up our data series. So this is for charts, for stocks, so we'll set it to daily. And let's set a range on here. Let's see how many days. I need to find out how many days of data I've got loaded on my chart here. Let's see. Alright, so we're going all the way back to 96. Alright. So I'm just going to go to 97, and we'll go to January 1st of 97. Yeah. Alright, a few more settings left for the optimizer. Let's see, what else? Alright, so we'll keep the best 10 results. And let's see. Yeah, we don't have time to optimize the data series, so we'll leave that off. See, optimize on, see, most people are interested in net profit. So we'll set that to net profit. And let's see, exit on close. No, we don't want to exit on close because we're, swing trading stocks, so let's set that to false. Okay, let's run the optimizer, see what we get. Oh. Oops, I got these backwards. Okay. Alright, from 1997 to today. There we go, let's put today on there. Okay. Oh, shoot, I forgot to do one thing. One thing that's important when you're running the strategy analyzer is to disconnect from your data feed. For some reason, Ninja's data feed engine, if it's connected, you get wacky results in the strategy analyzer. Don't know why, it's just one of those weird issues with Ninja's data feed engine. So I'll probably have to run this again, or I should say I probably should run this again since I had the data feed connected when I started it. And let's see, remaining time. Yeah, you can't really rely on the remaining time. As you can see, it's just kind of stopped. But it's still processing. This happens a lot, so that the progress bar will just stop and let's see. Alright, So Kevin, if you want to do your own testing, you're obviously more than welcome to. So if any of you guys want, if any of you guys want the files from these workshops, you're always welcome to email us and get these files. And so Kevin, right, so guys, let's see, just pull this back up, right? So if you want today's workshop files, just email us and tell us which files you like. If you want the workshop files, or do you want this stock and commodity file? Just tell us which file you want, and we'll send the BloodHound files to you, and then we'll send you the chart template file as well, and then you'd be free to do any testing you want. So let's see. See how we're doing. Now it's going to take 5 minutes. That doesn't sound right. This should be a very quick optimization. I wonder if disconnecting the data feed did something to Ninja. You never know. Let's see. Let's take a look here. Well, it says Ninja's doing something. Oh, that's okay. Yeah, it's taking a long time because we're back testing against the whole basket of instruments. Sorry, guys. That was another oversight. So you can see how the default is slightly highlighted in gray. Yeah, NinjaTrader's testing this on every single instrument in my default list. So okay, wow, actually, interesting. So it looks like, actually, okay, so Ninja's starting to count down now. So that's why it took so long. Geez, yeah, Ninja was building charts for all of these instruments here, and then back testing against all those instruments. So that's why it's taking so long. All right, but Ninja, it's starting to count down now. It's went down to 1:14. So that's good. Okay, we'll just let it run. We'll let it do its thing. Yeah, so we got nothing on all these other instruments because I don't have the data downloaded for all these instruments. So, but I did have some data for some of these instruments. Yeah, for Cisco and for Caterpillar, I had some data downloaded. And ExxonMobil, no, didn't do too good on Exxon, did it. So let's see, but for Cisco, that's interesting. Cisco, let's take a look at the settings that were used for Cisco. So let's see. If we look at the profit, all right, so a 5 ATR on the profit target and a 2 ATR on the stop loss for Cisco, cranked out a little bit of money over 10 years. So nothing fantastic. So there you go. To be honest, or not to be honest, but to what's the right word? Well, the way this system was written in the stocks and commodities, there was not a lot, but there were some components that were kind of subjective, as far as looking at the Keltner channel and price compared to the Keltner channel. There were some components of this that was subjective that could not be implemented into BloodHound. So what I built in BloodHound were just kind of some of the core rules that I could pull out of the article. Some of the easy logic that was written in the article that I could convert into BloodHound, is what I kind of showed you. But there were some components that were somewhat subjective, which is, basically looking at price in comparison to the Keltner channel itself, things like that. So there were some other components in there that didn't make it into the BloodHound system, right? So so that's why this didn't end up being a decent trading system, because what I built in BloodHound is not the whole system that the article outlined. So it's just kind of some key points that were built in BloodHound here. So and of course I didn't really do a thorough backtest result either. So but there you go.